Happy Monday, everybody. I hope you had a great weekend. Once again, I have mentioned before, we live in historic times. This past week was another one we need to talk about, and we'll need to preview this coming week as well. Today is July 29th, 2024, and this is your Monday Market Update. Let's review last week's action. A lot of action it was, and let's preview the week ahead. Stocks bounced back on Monday following the worst trading week since early April. Globally, China added stimulus in the form of rate cuts, added to the worries about the growth of the second largest economy in the world, but really those worries were simply ignored. Domestic eco data shows improvement. Biden bowed out of the race, making a Trump victory seem more likely. At least that's the way the market viewed it, and that is viewed as pro-growth. The political side seemed to overshadow things, and markets held their gain early. They pulled back a little bit into the European close, but then recovered, and ahead of the big earnings names, market hit session highs into the final hour. Markets were once again led by tech, even though the whole world seems to be dealing with the fallout from the CrowdStrike issue. Most of it has been cleared up by now, but it did give cyber a bad name. Earnings. As of Monday, 14% of S&P 500 earnings companies have reported. Keep that in mind. Even as I'll start to extrapolate what those earnings mean, I will focus on what overall we see, even just after 14%. So when we see that 80% are beating earnings expectation and 62% are beating on revenue, as of Monday, earnings growth rate is close to 10%. I say all this because remember, that is only 14% of the companies. We have a long way to go. Even just Tuesday was set to get UPS, GM, GE, Coke, Tesla, Google, and Visa, and some others. Quick spoiler, by the end of the week, the volatility will be back. Last year, S&P declined 11% between August 1 and October 30. Then it rallied 16% from October 30 to December. There is a lot left to happen. By the end of the day, Monday, the Dow was up just about a third of 1%. The S&P was up a bit over 1%. And the NASDAQ was up 1.5%. To keep score, NVIDIA was up close to 5%. Meta and Alphabet were up more than 2% each. And CrowdStrike was down 18% last week after the outage was down another 13% on Monday. Tuesday opened little change and earnings ran the show. UPS disappointed, but that was offset by Coke and GM. The only U.S. eco data was existing home sales. They missed, so that rolled markets over a little bit, but as the Mag 7 earnings are coming soon, markets rallied to new highs again. Solid 2-year Treasury auction and the Tesla and Google pending earnings. Markets did start to see some more rotation ahead of that, and markets closed at session lows. The Dow was down less than a quarter of 1%. The S&P also down a bit less than a quarter of 1%. The NASDAQ was down just a hair. And the quiet first 2 days was replaced later in the week, of course, by Wednesday, brought in that volatility I mentioned. Tesla and Google lit the flame, and away the algos went. Tesla down 12% of the day. Google's news was not bad, but down 5% regardless. And this was the red day. Apple and Amazon down almost 3%. Microsoft down 3.5%. Meta down 5.5%. NVIDIA down almost 7%. By the end of the day, the Dow was down only 1.25%. S&P was down 2.33%. Now, that is the first time the S&P was down more than 2% in 356 trading sessions. That's the longest streak since 2007. And the NASDAQ was down 3.75%. Recall, I keep saying that earnings will be the catalyst. We'll see if this is what is required to see stocks come down a bit. The moves here are caused by a lot, but in my opinion, primarily positioning and of course, earnings. Eco data was also a bit mixed. Manufacturing PMI did fall below 50 into contraction territory, and services went up to 56. This will all play into this week. More to come on that soon. And if you were not sure if the world was changing and a bit upside down, Southwest Airlines is moving away from their unique seating program. They will also add some overnight flights. It is definitely an upside-down world. Stocks tried to recover from Wednesday's selling on Thursday as markets opened flat. Then it did come for sale again. Earnings and eco data were mixed, positioning for PCE on Friday. By the end of the day, the Dow was about 0.25% higher. S&P down another 0.5%. The NASDAQ was down almost 1%. All of the Mag 7 that you know were down again, and the S&P was down, and the equal weight S&P 500 was up slightly. Just a reminder of, although it is so useful, the S&P is an overweighted index to the largest companies. Friday morning, we had markets react to the PCE inflation numbers and gapping higher on the open. PCE was in line, core was a bit hot, but that was good for the markets regardless. Everyone on the other side of the boat, as I mentioned from the beginning, volatility is back, keeps things interesting. After a rough week, the Dow was up over 500 points early. 3M, United Health, Visa, Merck, and Home Depot, all big movers on the day. University of Michigan survey was also in consumers were less optimistic and a low reading on inflation expectations. By Friday, 40% of the S&P 500 companies have reported. 78% beat estimates, and now 40% is better to read the tea leaves than the 14% we looked at on Monday. Pretty much the same read at this point. By the end of the day, Friday, Dow was up 1.5% near the high side for the day. S&P was up 1.1%, and the Nasdaq was up 1%. For the week, the Dow was up a bit over 0.75%, the only one in the green, while the S&P was down 0.75%, the Nasdaq was down over 2%. After all that, for the week, 5 of the Mag 7 were still up for the week. Only Tesla and Alphabet were down for the week. This will be another big one. Let's preview this week ahead. We'll get Fed earnings, we'll get earnings, we'll get jobs. Wow, everything that goes into the mix, we'll get them all. We've got manufacturing data today, along with McDonald's, an important read on the consumer. Tuesday will be the start of the Fed meeting, JOLTS, consumer confidence, housing costs, and throw in some earnings from Microsoft, Procter & Gamble, Merck, Advanced Micro, and even Starbucks. Wednesday, we'll get ADP, jobs, the most important the important FOMC decision, and the press conference, of course, and earnings, Meta, MasterCard, T-Mobile, Boeing. Thursday, we'll bring jobless claims, ISM manufacturing, construction spending, and a few important earnings, Amazon, Apple, Intel, and the FOMC will compete for the headlines. Will not compete for the headlines because there is no Fed head. There are no Fed heads all week. And finally, we'll close the week on Friday with the jobs report and big oil earnings from ExxonMobil and Chevron. To sum things up, as this week looks to get started in the green, at least it does at the open today. This is a pivotal week. Recall that we have spoken about the 4 pillars that I think hold up this market. First, solid economic data. Second, impending rate cuts. Third, falling inflation. And finally, AI enthusiasm. While Friday was so strong, there have definitely been some changes in the wind here, and we will see almost every one of those pillars are addressed this week. It is my opinion that this week's earnings and what is said about the forward guidance will make or break the next move in this market. As always, I'll be watching this, and I plan on reporting it to you next week. Any update on next week on Monday, and if it warrants, we'll return with a special report sooner. Until then, please stay in touch. While we may enter the dog days of summer, we have a lot going on here and around, and this is the last July video, so we'll see you in August. Have a great week.